If I could sit down with my 18-year-old self for 1 hour, I'd skip the cliches and hand over a map. Not a motivational poster, not a string of hacks, an actual map for how credit works in the real world, so you never feel like lenders are speaking a language you don't know. Credit isn't about being good or bad with money. It's a scoring system and a set of rules that either work for you quietly or cost you attention, time, and cash. The earlier you learn those rules, the cheaper your life becomes. This is the guide I wish someone had put in my backpack the day I got my first credit card offer. Start with the simple, unromantic truth. A credit card is a short-term loan with a timer. Every month has a statement closing date and a payment due date. The bank watches your purchases for about a month, takes a snapshot on the closing date, and that snapshot becomes your statement. Pay that statement balance by the due date, and your purchases from that period cost you zero interest. Pay less than the full statement balance, and you lose the grace period. Interest starts accruing on what remains, and new purchases usually begin earning interest immediately until you fully clear the account and complete one entire cycle paying in full on time. That's the difference between a free convenience tool and a very expensive habit. The timer, not your intentions, decides what you pay. APR sounds like once-a-year math. It's actually a little bit everyday tax. Lenders convert the annual percentage rate into a daily rate and charge it on your average daily balance. That means carrying balances for just a few weeks can quietly add up because interest compounds on yesterday's interest. Minimum payments keep you current but maximize what you pay in the long run. If all you can hit this month is the minimum, fine. Protect your on-time history, but treat it as a short stop, not a lifestyle. The fastest way to make credit work for you is to design it so you never pay interest at all. Set auto pay to the statement balance and use reminders so you don't rely on memory on the busiest week of your month. Your credit score is not a moral grade, it's a risk estimate. It mostly listens to 5 things. First, whether you pay on time. One late payment can weigh on your reports for years, which is why automation beats willpower. Second, how much of your available credit you're using, your utilization. Think of utilization as pressure. The less pressure you put on your lines, the better you look. Keeping your reported balances low, both per card and across all cards, helps a lot. That reported word matters. Utilization is usually measured at the moment your statement closes. You can pay mid-cycle before closing, so the statement snapshot is low. Then auto-pay the full statement to preserve your zero interest grace period and pay zero interest. You've lowered the number the score sees at just the right moment. This is why people say under 30% utilization or under 10% looks great. What they're really telling you is don't let the snapshot show you close to maxed out. You can spend more during the month and still report a low number if you pay before closing. It's a calendar game, not a virtue contest. Boundaries keep you from turning short-term convenience into long-term drag. Lock cash advances in your banking apps so you can't accidentally pull cash and trigger immediate interest at a higher rate. Use virtual card numbers for sketchy websites. Turn on transaction alerts so your phone pings you whenever the card is charged, especially for online and international transactions. If you move, update your address immediately so physical mail doesn't go to the wrong door. And separate your spending on purpose. A weekly debit card for groceries and ordinary life, and the credit card for planned, protected purchases, like travel bookings, online orders from strangers, and big-ticket items that benefit from purchase protection or extended warranties. That separation makes reconciling your accounts a 5-minute check, not a monthly mystery. Rewards are fun, and they are bait. Cashback, points, miles, they're funded by interchange fees merchants pay and by the interest and fees from people carrying balances. The only free rewards are the ones you collect while paying zero interest and zero late fees. Treat rewards as small discounts on things you would have bought anyway. Never let them talk you into spending more or letting a balance ride. Getting 2% back while paying 20% interest is not a flex, it's a donation. If you've heard people say you need debt to build credit, here's the nuance. You don't need ongoing balances. You need active, well-managed accounts. A single card paid in full builds just fine. Having at least one installment account in your file can help your mix over time. A small credit builder loan through a reputable institution or the student loan you're already carrying can fill that role. A credit builder loan works like this. The lender holds the loan amount in a savings account. You make small monthly payments. At the end, you get the savings and a string of on-time payments in your history. It's training wheels debt, useful if you're starting from zero or rebuilding. Rebuilding brings up the scariest part for most adults: mistakes. Life gets loud, people miss payments, a card lands in collections, and shame grows faster than interest. Here's the calm path out. First, open your mail and your app. Don't guess. List your cards, balances, APRs, due dates, and minimums. Call each issuer and align your due dates to the same day of the month, ideally a week after payday, so autopay doesn't collide with rent. Put minimum payments on autopay for every card. That protects your on-time history starting now. Pick a payoff order. If you need quick wins, attack the smallest balance first. If you want maximum interest savings, attack the highest APR first. Either way, everything extra goes to the current target, while you pay minimums on the rest. When a balance dies, roll its old payment into the next target. If you've been otherwise spotless and you slipped once, ask for a one-time late fee waiver. If you're underwater, ask for a hardship program, temporary rate reduction, fee relief, or a structured plan. Call before you miss. Banks are far kinder when you call early. Balance transfers can be a lifesaver or a trap. A 0% promotional rate for 12 to 18 months with a transfer fee might save a lot if you schedule the exact monthly payment to finish before the promo ends, and you freeze the old card so you don't run it up again. If you can't afford the payment needed to finish on time, skip the transfer and stick to the payoff plan you can keep. The goal is not the perfect math on paper. It's a plan that survives your busiest month. Collections and charge-offs are scary, but not a permanent sentence. If a debt is already with a collections agency, document every call, keep communication in writing when possible, and don't make a small payment just to show good faith unless you understand whether that restarts clocks in your location. Some collectors will agree to settle for less than the full amount. Some will agree to request removal of their trade line after payment. Get every promise in writing before you pay. Even when a collection remains on your reports for a while, a growing string of on-time payments on active accounts can outweigh old damage faster than you think. Identity theft and data leaks are now part of life. Protect yourself with simple moves. Use unique passwords and a password manager. Turn on two-factor authentication. Consider a free security freeze with the credit bureaus, so new accounts can't be opened in your name without your explicit lift of the freeze. A freeze is stronger than a lock, costs nothing in many places, and is easy to lift temporarily when you need to apply. Check your credit reports regularly. Many countries offer at least one free report per bureau annually. If something is wrong, dispute calmly with documentation. If you are a victim of identity theft, file the appropriate report through your National Consumer Protection Agency or police. Keep copies and provide them to creditors. Most creditors will remove fraudulent accounts once properly documented. Now, let's flip to the offensive playbook: how to grow your limits, keep your utilization low, and make sure lenders see you as low stress. If you run a card cleanly for several months, on time, low reported balances, no red flags, many issuers will approve a credit limit increase, sometimes without a hard inquiry. Phrase the request clearly. I'd like to request a credit limit increase to lower my utilization and accommodate travel. I'm not planning to increase spending. Will this be a soft or hard inquiry? If it's a hard pull and you're about to apply for a mortgage or new loan, consider waiting. Update your stated income annually. Issuers base limits partly on income, and you're allowed to include household income you can reasonably access. Higher limits with the same spending lower your utilization, which helps your score and your flexibility. If you're tempted to keep opening new cards just for sign-up bonuses, anchor on your goal. If your file is thin, each new line shortens your average age and adds an inquiry. Space out applications. Focus on 1 or 2 long-term keeper cards with no or low annual fees and useful protections. If you later want to simplify, ask your issuer to product change a card to a no-fee version rather than closing it outright. That keeps your account age alive while removing the fee. Here's a rhythm that makes all of this easy to live. Think in weeks, not months. Every Friday morning, a separate debit card reloads with the number that covers groceries and ordinary life for 7 days. Your credit card handles planned, protected purchases, travel, online orders, electronics, rental cars, hotels. Auto-pay the statement balance. 3 days before your statement closes, set a reminder to make a small payment so the reported balance is low. On the first of each month, peek at your reports or your card app. Check for weird charges and confirm your due date alignment still fits your paycheck. Twice a year, on your birthday and half birthday, do a 15-minute review. Lower any high balances, ask for a soft pull limit increase if your utilization is consistently above your comfort zone, skim the benefits guide so you know what protections you already have, and project whether your taxes and withholdings are on pace so April doesn't ambush your cash. Travel is where using a credit card instead of a debit card helps the most. Hotels and rental car agencies often place large holds. With a debit card, that hold can tie up your cash for days. With credit, your spending power isn't frozen. Many mid-tier cards include rental collision coverage when you decline the rental agency's waiver, trip delay reimbursements, and extended warranties. That's real money saved if you use them intentionally. Read the benefits once, screenshot the key pages, and keep the images in a travel folder on your phone. If something goes wrong on a trip, you know exactly what you're entitled to without scrolling through marketing pages. The most powerful secret isn't glamorous, aligning your credit life with your calendar so you stop paying late fees and attention taxes. If you do nothing else, do this tonight. Log into each card and set autopay for at least the statement balance. Change every due date to land within the same 5-day window, ideally a week after your paycheck. Turn on transaction alerts. Add a small reminder 3 days before your statement closing to make a tiny payment so the reported balance is low. Move shopping and trading apps off your phone's home screen. Put a sticky note in your wallet. Statement balance, due date, grace period. Those 3 phrases are your whole card education condensed to 1 line. You could forget the rest and still avoid 90% of pain. Let's walk into 3 real stories to see how the choreography beats motivation. An exhausted freshman living off campus juggles classes and a part-time job. Delivery apps and surge-priced rides eat every spare dollar. He opens a student card and sets autopay in full. He aligns the due date to 6 days after his paycheck. He moves everyday spending to a weekly debit card he reloads on Fridays. He writes 2 exhausted night dinners on a freezer whiteboard. He pays a small amount 3 days before the statement closes to report low utilization. 90 days later, the late-night panic spending is gone. His reported balances are low and his score rises. Not because he became a different person, but because his calendar started doing the remembering. A 19-year-old with no credit history opens a secured card with a $300 deposit and becomes an authorized user on his aunt's 10-year-old card with a $0 balance and perfect history. He never swipes his AU card. He puts his phone bill on the secured card, sets autopay in full, and lets it season. 6 months later, he asks the issuer to graduate him to an unsecured card and return the deposit. They do. Then he requests a modest limit increase to lower utilization. He now has 2 lines, both on time with growing age. He didn't need a fancy bonus or a high limit. He needed a clean file that would be old when he needed it to be. A 20-year-old entrepreneur with an online shop grows fast and buys gear impulsively on a personal card, then pays late when cash flow dips. She creates a staging, no-card checking account where all sales land.
Twice a month, she pays herself a salary to a bills-only account. The business expenses move to a separate business card with auto pay in full and calendar reminders 3 days before closing to lower reported utilization. She asks her bank for a business credit limit increase with a soft pull, citing 6 months of on-time history and higher revenue. Approved. Now she has breathing room, lower utilization, and no late marks. The biggest change wasn't her revenue, it was her choreography. Here are the quiet moves that make your score and your life happier over time. Keep your oldest no-fee card open for age. If a card has an annual fee you no longer want, ask to switch to a no-fee version. Don't reflexively close it. Add income updates annually to your issuer profile so your limits can grow with you. If a single late mark appears after years of on-time payments, ask for a courtesy removal. Many issuers will say yes once. If you plan to apply for a mortgage within a year, avoid new cards and big limit changes. Keep your file quiet and your utilization low. And if someone offers to repair your credit instantly for a fee, walk away. You can dispute genuine errors for free. What really repairs credit is 6 to 12 months of calm, on-time behavior. That's boring, and that's why it works. I wish someone had warned me about emotional traps too. The feed will tell you to take advantage of every sign-up bonus, or that carrying a small balance helps your score, or that closing old cards cleans your file. None of those blanket statements are reliably true. Chasing bonuses can shrink your average age and pile inquiries. Carrying a balance does not help your score, it only costs you interest. Closing old cards can increase your utilization and shorten your average age. There are reasons to do each of those things in specific contexts, but the default winning play is pretty boring. 1 or 2 long-term cards, auto pay in full, low reported balances, patient age, and a separate weekly debit card that keeps daily life honest. There's one last mindset shift I wish I learned at 18. Credit is not about feeling wealthy. It's about being trusted by systems. If you use it for status, it will tax you. If you use it as a shield and a tool, it will quietly make your life cheaper. It protects you from fraud because you can dispute charges and withhold payment during investigations. It handles travel holds without freezing your cash. It extends warranties and adds purchase protections you didn't think to price in. And it builds a history so that when you need to borrow for a car or a home, you get offered lower rates because lenders see you as boring in the best possible way. Here's your start tonight routine so you actually live this, not just agree with it. Sit with Water and your banking app. For every card you own, set autopay for the statement balance. Align due dates to the same week, preferably the week after payday. Turn on transaction alerts, add a calendar reminder 3 days before each statement closes, and make a tiny payment that day so the reported balance is low. Move shopping and trading apps off your home screen. No badges, no pings. If you don't have a card yet, open a student or secured card. Put one small bill on it and automate in full. If your file is empty and you trust a family member who runs a clean card, ask to be added as an authorized user with the understanding you won't use the card at all. You're borrowing age and history, not spending power. If you're carrying balances, put minimums on autopay, pick a payoff order, and schedule your extra payment on payday so good intentions don't get negotiated away. Then let the system run for 4 Fridays before you change anything. Boredom is proof it's working. Months from now, the biggest change won't be your score, though that will likely rise. The biggest change will be the quiet. No late fees, no interest, no I forgot, no panic when a travel hold lands. When you do need credit for something big, your application will read like a calm person who respects systems. That's what lenders reward, because that's what lowers their risk. And you'll have something better than credit secrets. You'll have credit habits that make your month cheaper, your